Please allow me to introduce this week's speaker. Nestor Gavidia is a bilingual associate business consultant. A native of Peru, oh cool, one of my favorite places, with more than 15 years of CPG B2B sales and marketing in the US and internationally. Nestor has worked with retail chains, distributors, wholesalers, importers, exporters, and e-commerce businesses in the merchant systems, transportation, and food industries. Nestor's passion for business and commitment to follow through help entrepreneurs succeed. He is experienced and skilled at conducting business and negotiations with people from a variety of cultures and backgrounds. He holds a BS in Business Administration from the University of Baltimore. Nestor joined the MWBC in September of 2020 as a business counselor, where he has been providing training, one-on-one counseling sessions, and technical assistance to childcare providers and other businesses in Montgomery County. And without further ado, why don't we all give him a Zoom clap and welcome him to today's session.
Well, thank you so much, Stephen, for the introduction. Very nice. Welcome, everyone. Good morning. It's a beautiful day. Can't complain on February to have this weather. And I'm looking forward to have a wonderful time and dynamic presentations. I'll be speaking, facilitating some information to you, but I would like to connect with each of you individually and participate and exchange ideas, insights, experiences, because that's how we learn, from somebody else's ideas, experiencing failures, etc. So what I'm going to do is I'm going to share my screen to start with a presentation. All right. Stephen, can you see the presentation right now? All right, perfect. If you have any question or you have trouble hearing me, or you don't see the presentation, please raise your hand or send me a message on the chat box. Again, thank you, Stephen, for the introduction. It's an honor to facilitate this workshop about the financial foundation for your business, and looking forward to facilitate, to explore the entrepreneurship with all of you. We really value the amazing partnership we have with the Gaithersburg-Germantown Chamber of Commerce to make this session possible. This is the second workshop of a 3-part series focusing on creating business plans, financial foundations today in marketing. Previously, you have Marta Jimenez. She did a presentation about building a business plan. Before we begin, let me cover some housekeeping announcements. I would like for each of you to introduce yourself to the group. Tell me your names. If you have any existing business, tell me what you're doing. If you don't have a business yet, what kind of business you're planning to open or start up, and any expectation for these workshops. Please use the chat box for any questions. I will pause after a couple of times during the presentation to make sure I answer questions that people are typing on the chat box. You all will be muted. If you have questions, raise your hands and check meet. All right. So let me start sharing about myself. Originally from Peru. I've been living here for 15 years. I have a passion for business, and I really, really love helping entrepreneurs. It's one of my best passions, hobbies, activities I can think about besides cooking and playing soccer. And I can spend hours talking with entrepreneurs, helping them, assisting them, sharing experiences. That's how I have incredible experience with people from all over the world, not just in the US, but Central America, Europe, and Asia as well. So this is the time I would like to ask if you can participate. Tell me a little bit about yourself, your business idea, or what your plans. If you don't have a business yet, what are you planning to get from this class as well? So I'll be welcome anyone to jump in and introduce yourself.
Share.
Anyone?
I guess I can go ahead. So I'm Philippa. I started Channer Consulting, which offers marketing consultant services. I try to focus primarily on Montgomery County. And I do have goals to build my business in the coming years. Right now, it's just me. So I'm hoping to have a team of at least 8 with different roles. And so that's my goal here, is to learn as much as I can to be equipped. So when I'm ready, I know where to go.
Oh, that's fantastic. Thank you so much for sharing, Philippa. A pleasure. Anyone?
Hi. Oh, I'm sorry.
I apologize. Go ahead.
Oh, no, I'll go after you.
My name is it's Levietta Dewberry. I just go by Miss Dewberry since it's so hard to pronounce my first name. I am the CEO of the Professional Development Training Center, and we provide computer-based training. We customize instructional design and content, and I actually provide leadership development training, as we are also certified through the John Maxwell team. So I'm hoping that from this training workshop that I would be able to learn a little bit more about how to get information for funding different phases of my organization. And that's really critical for me and important for me at this stage. So welcome and thank you.
Fantastic. Thank you so much, Ms. Dewberry.
Hey,
Yes.
Nestor, this is Veronica Wright. My business is called Comfy Cozy Blankets by VW. And right now I'm in the process of looking for a manufacturer to make a special faux fur material.
Mm-hmm.
And I just had a hard time finding the manufacturer. I may have one lead. I'll drive up to New Jersey to visit them, but it just seems like, you know, I give them a sample of what I'm looking for, and then they, you know, they send it overseas, and that company never, whoever is helping them, they just come back and say they don't make it. But I found the machinery. I found the machines that are used to make that fabric. So I think it's a matter of finding a manufacturer that is willing to make it.
All right. Thank you so much, Veronica, for sharing. And just to inform something here, I can provide a follow-up with Marta Jimenez, obviously. And any of your requests here, I will put together a list and see how we can assist you with those resources as well. I know 2 hours won't be able to cover everything here, but we will provide a follow-up with Stephen and see how we can help you to, or guide you where to go to get those resources and things you need to do to make your business successful.
Oh, okay.
Thank you, Veronica, so much. And next, please.
Head south on Seabrook Annapolis Road, then turn right onto Annapolis Road.
And who would like to go next?
I can go next.
All right.
My name is Yulia, and I am from Kids School. We launched in at the end of 2019. So I'm in the business for 2 years. And financial foundations. Today's workshop would be interesting for me in terms of how to build financial structure in the company in general, and what are the main points, because I've been always been not in the financial part. I have to push myself to learn this financial part of the business all the time. So yeah, thank you.
Thank you so much, Julia. And All right, what we can do is let's start. And for those who hasn't introduced themselves yet, I will give the chance later during the presentation to do so. So please don't hide, you will talk. So, let's start with a workshop now. So this is just a disclaimer that this training is intended for guidance only. We always suggest, and this is through my experience with clients, you need to seek for professional support, assistance. You need a lawyer, a financial advisor, you need an accountant, and you need a banker. Always seek for a professional whose expertise is in that specific area, always. The agenda for today is we're going to cover the course objectives, the introductions. You already know about the Maryland Women Business Center. We just refresh a little bit. We're going to cover steps, 5 steps for successful business plans and startup process, about budgeting and sales projections. We are going to cover also the 3 important financial statements, including the income statement, balance sheet, and the cash flow statement. And at the end, we're going to close with a break-even point analysis. These key elements are very crucial for your financial planning because it gives you the startup to start thinking ahead and start planning for the future of your business, expansion or startup process. The objective for today is I'm going to explain how an evolving financial planning process can help you to make decisions as a business owner. Understanding the importance of budgeting and sales projections. Really important to understand the process. I'm not asking you to write your own or to create your own income statement to balance sheet statements, but you as a business owner, you need to know how to read, how to interpret, and how to make decisions based on the data those statements or those financial reports are providing to you. Then we're going to describe the 3 important financial statements and understanding how to calculate a break-even for the business. Many entrepreneurs come to us asking, Nestor, not sure if I'm making money, I'm making profits, I have a lot of revenue, but my expenses are over. So in this part, we're going to explore how you are going to calculate the break-even analysis to help you to understand if you're making enough money. Okay. The organization, the Maryland Women Business Center, this is an initiative of the Rockville Economic Development, a non-profit organization. We are one of the resources center for the Small Business Administration. We help over 1,500 women every year, and men also, to gain the skill connections and confidence to navigate entrepreneurship. Our clients, they like to work with us because we have a very supportive environment that helps them to build confidence in their ability to succeed. We offer workshops, webinars, business counseling, and online training. We provide technical assistance through one-on-one counseling sessions, plenty of trainings, and we assist entrepreneurs with building a business plan, creating a marketing plan, a financial analysis, and many other subjects. Keep in mind that these services are available in English and Spanish, and all our counseling sessions are free. We don't charge for that, so take advantage. Our programs, we have procurement for those who want to work or bid for government contracts. We also have the childcare development program for childcare providers in the Montgomery, Frederick, or Prince George County who wants to expand or create a childcare program. We have a program called We Grow. We pretty much, this is a 10-week program where we help businesses to put in line with the financial aspects to make sure they can go over and apply for loans or different financial aids for a business, for expansions or startups. And we have the Shop Local. This is an incubator program located in Rockville. We have actually a retail space where we have between 7 to 8 vendors, women entrepreneurs, selling, negotiating, providing great services and products to clients. So this is a real time experience, hands-on, how to run a retail business. Amazing program. So let's go to the next. And we have our offices in these 3 different counties. Let's start with the financial plans. And before I start with this, I know Marta Jimenez facilitated us creating or building your business plans last time. And I want us go over a little bit about that, because part of creating and building a business plans, there is the last section, which covers 6 different sections about the business model, the marketing, the operations, and the last part was financial analysis and reports. This part tends to be a little tedious and challenging for most people because it takes time. It takes a long time to collect data, to do numbers, and some people just don't like working with numbers. Most people don't like working with numbers, and that's okay. But the main goal here is, even though you are not going to do these financial reports or statements, you need to be able to understand them, because with that information, you need to make key decisions for your business. So the step number 1 is going to be defining and arranging your financial objectives and goals, right? So you need to have goals and objectives that are going to help you to get from point A to point B, from point B to point C. That's very clear. It has to be achievable and quantifiable, clear, and have a defined time frame. You need to be able to separate your needs and your wants for these steps. Running out of money in a small business is the biggest risk, right? You're looking for keeping capital, keeping cash into your business. Owners often know that funds are needed day to day, but sometimes they don't know, there is not clear how much revenue is being generated. And that disconnection between not having a clear picture of how much revenue is being generated could be so dangerous for the business. Inexperience managing a business is another consequence of not having a good goal and objective. It can negatively impact your more small business. So the goals and objectives here will be the guide for the financial plans and should provide a roadmap for your financial future. When a goal is specific and measurable, you will have a higher percentage of success in your business. For anyone who is really overwhelmed or struggles with time management, you need to put in place the SMART goal process. And maybe you heard this acronym before, the SMART goal process, SMART, which stands for specific, measurable, achievable, relevant, and time-based, right? So Philippa mentioned something about consulting business services, right? So let's think about my overall goal is I want to run my own consulting business. So I put in place my SMART goal. So the SMART goal is within a month, let me think, in a month, I'm going to land my first client after organizing a campaign and planning and sending out several pitches to potential clients. So you have your SMART goal within a month. You're putting a period, you're putting a deadline for that. Let's start with the acronym, the S for SMART, be specific. How you are going to get your first client within a month. So look at your network. Most of these people will use LinkedIn. So use your network and seek for companies in need for consulting services. Your personal network, your professional network, look at them, start working on that and see which kind of companies are looking for consulting businesses or services. It has to be measurable. So To do something that is going to be measurable, you need to pitch my first 3 clients within 2 weeks. And you're putting deadlines on each activity. I have to pitch 3 potential clients within 2 weeks. Otherwise, I'm not going to move forward. And after that, once I gain confidence and experience, I will, from 3 clients, I will go to 5 clients. I will start pitching 5 clients after that week. It has to be achievable. That's for the A for SMART. So I will outline what I can do for the business, and I'm going to perfect my pitch and presentation and work on my portfolio. Relevance, how we incorporate the relevant aspect of the SMART goal. Knowing that I'm good in something, I will utilize my contacts to remain focused on what I love to work and what I really enjoy to do. And time-based, I will start pitching clients immediately within a month, and I will have my first paying client in a month, right? So you're just putting together a SMART goal plan by week, 2 weeks, 3 weeks. And each aspect needs to have a clear objective and goal and due date, deadlines. Because if you don't have deadlines, it's going to be so hard to move forward. So the step number 2 is going to be gathering business, financial, and personal information. This is when you sit with your finance planner or advisor, and you start sharing with him or her what are your needs and what are your expectations or what are your goals and objectives. The advisor will talk to you about your income expenditure, how much money you're getting, how much money is out, assets and liabilities, risk, tolerance and capacity. This is pretty much an assessment that your financial advisor will conduct with you. And it's very important to be honest here because based on this assessment is the advisor is going to draft a map and a process for you to get to from point A to point B, point C, based on the goals, based on the objective you have. Step number 3, analyzing your financial and personal information. In this area, we are going to mention a little bit about ratios. What's a ratio? Ratio is a way to measure some financial information and comparing one aspect from another. Comparing your income versus your expenses. Comparing your assets versus your liabilities. You're putting a number there to see how healthy is your financial status of the business and your personal as well. So I'm not going to spend time explaining you with all this formula for the ratios, but it's very important for you to use them to calculate and to see the performance of your business in general. When you talk to an investor, when you talk to a financial advisor, when you try to get more capital, venture capitalists, whoever, there is a higher chance they are going to ask you for these ratios. They're going to ask you how you're doing, how your assets doing against your liabilities. What's the gross profit from 2017 versus 2018 and 19? With those simple numbers, it will be so clear for them to make a decision if they want to put money in your business or they want to invest money into your business. So again, this is something to think about it, look at it. It's quite complex about those ratios, but when you start understanding more about the financial aspect of these terminologies, it's going to be so much easier for you to understand and move forward. Step 4, development and presentation of the financial plans. So your financial advisor already gathered your information. They make an assessment to you. They evaluate your income, expenses, your assets, your liabilities, and they started drafting your business plans. They will evaluate your net worth statements, which is a balance sheet, your annual consolidated tax calculation, how much taxes are you going to pay, how we are going to allocate those payments for taxes every month, or every quarter, or every year. They're going to evaluate your annual cash flow reports. Are you going to have a surplus or deficits in your cash flow? So these reports are presented and explained to see the big picture of your business. It's when you go to the doctor, you get X-rays, you get analysis, tests, different things to evaluate the health of your body. Do you need medication on this? You need a different treatment for this. It's very similar. So these statements are going to help you to visualize, wait, I'm losing money in this category, I'm making more money on this, my costs are too high, I need to lower my costs, I need to find a cheaper manufacturer, I need to find cheaper to buy different assets, etc. So this financial plan is going to help you to put like a map about you. It's an X-ray of your business very much. So very important to finalize this statement with your financial advisor. Step 5, implementation and review the financial plans. So again, once you have all the information, you report with you, for you it's going to be so much easier to make decisions. Now, my income is not as great as I was thinking before, and my expenses are higher. What decisions I need to make to improve this? I need to lower my cost of goods sold. I need to find a cheaper manufacturer. So you start making decisions. Maybe the rent of the space I'm leasing or renting for my retail store is too high. Maybe the location is not a good fit for my business. I need to move and find a different locations. So all these reports will help you to understand your financial risk and help you with analyzing how you're going to make that big next step to make your success. Let's go with the financial plans in this moment. Let me see. Let me check the chat box 1 second. I will have one pause here to see if we have any questions. All right, no questions so far. So the financial plan. Can anybody tell me what a financial plan is? Anything that comes to your mind, that's okay. We're here to learn. And you're gonna hear different experiences, different perspectives of each one. Anyone would like to jump in?
It's like an overview of your finances, business finances, and a resume of your finances for your business.
I like that, the resume for your finance of your business. I never heard that before, and it's very clever. Thank you so much, Marguerite. Next, anyone else?
Sorry, what is the question?
What do you understand for financial plan? What is it for you? What do you think it is or mean?
It's very relevant to business plan.
It's relevant to the business plan. Yeah, it's part of the business plan. Remember with Marta, you did last time.
Yes. Mm-hmm.
I think the business plan was the last one, right? show 6 different categories. Normally, we leave that to the end because you need to do your market research.
Yeah.
Check if you're going to be profitable, you're going to make money on opening that. Then you need to do your marketing plans, how I'm going to communicate, how I'm going to send the message to potential clients about my business. Then you have the operation side, which is who is going to do what, who is going to be able to hire. And then you have the financial plan. Yes, exactly. So the financial plan is everything, marketing, operation, hirings, projection, everything comes to the financial area. Perfect. All right. So the financial plan is the most important thing in the small business. It's a roadmap. It's a guideline, a reminder of what your goals are and what you're trying to achieve in the short and the long term. If you don't have a map to go somewhere, well, now we have GPS, obviously, but remember maybe 2004 or 5, when you didn't have GPS and you have to bring in your car the map, or you use Google or MapQuest to print it out and see where you're going, it's the same. So you need a map to go from point A to point B. Your financial plan helps you manage your cash flow. Most businesses have income that varies from season to season. A good financial plan will help you to be able to tackle those changes into your accounts. So you have a beverage or you're selling beverage, most likely you're going to have more success or more sales during summer and springtime. Obviously, wintertime you may still sell beverage, but maybe you need to change it from cold to hot beverage. So financial planning can also help you prioritize expenses. In a small business, conserving financial resources is a must. You need to, overall, the financial plan is there to help you to measure your progress. How did you do last season? What steps did you make to achieve those goals? When a business is when you have a small business, it's so hard sometimes to stay focused because you are the accountant, you are the lawyer, you are the record keeper, you are the inventory, you are the marketer. You do everything from social media to warehousing to shipping out your products and services. So that having a good prepared and well-planned business plan is going to help you with the whole process and how you're going to operate and how you're going to sell your products and services.
Excuse me, I have a question.
Yes.
My question is, in my case, I don't, my business really hasn't started. So a lot of this, much of my financial plan will just be estimating. But how do I get that information from other companies that are similar to build up an accurate estimate for my financial plan, especially when you start talking about your spend plan, like your expenses, your operating expenses and stuff like that? Because they also in the financial plan, the investor, they're going to be like, well, who are your competitors and how much money are they making? And in my case, my competitors are going to be big box stores like Target and Pottery Barn and Nordstrom that sell faux fur blankets. So I can't get detailed information on what they're making.
Thank you. Great question. Part of the market research is it takes a lot of work. And there are several organizations, including our organization, the Chamber of Commerce Gaithersburg-Germantown, or SBA. They will provide some data about competitions, strategies that you can utilize for your business. when you're thinking about competing with the big boxes, people are scared. Oh, Amazon is open everywhere. Like nobody's buying anymore from my shop, losing money. They just open a new Target around the corner and things like that is happening, and you have to deal with it. You need to be able to find a solution. You know what I love the most about this country? That there is opportunity for everyone. So you need to be able to find your ideal client who is willing to pay for something unique, for something handmade that will provide value and provide a solution for that client or customer. There is always an opportunity. Yes, you are not going to compete with Bed Bath & Beyond. Maybe your prices are going to be a little higher, but focus about your branding, focus about your product, how you can modify your message, your branding strategy towards your product and services that Bed Bath & Beyond, Target, or Amazon won't provide. This is handmade. I'm making a social impact on my product and services. Just to give you an example, I was talking with a client a few weeks ago, and she sews, and she's from Africa, I do believe it was Nigeria, and she does these handmade clothing accessories, beautiful handmade. And one of the best marketing strategies for her was, I'm not going to be able to compete with these big boxes stores, of course, but how am I going to present my products to clients? You know, part of the profit goes to a foundation back in my home country that support women entrepreneurs. So you have a social purpose right there. You having a positive impact on the environment. She used biodegradable materials to do that. So right now, people are looking how your product is going to help them, but also the impact, the positive impact your product and services are having towards others. Data, not hard to find, and we can talk about, I can do a follow-up, actually, I put my notes here. We can provide some data where you can go and find information about competitions, market analysis, trends, but also go out to the store, look what kind of product they're selling, what kind of material they're selling, see the sale price, and it will help you talk more with more ideas about your service and products overall. But we can go in more detail later, and we will provide a follow-up, Veronica, for you for sure. But again, if you don't have a business yet, the startup process goes into how you're going to calculate your cost. Well, first of all, you want to open a manufacturer, you need equipment, you need a building or a place to operate. You need to make phone calls, how much you're going to charge me for the lease, for the rent for this space, how much is this machine cost, sales projections, we're going to talk about that in a couple of minutes. And we go to the financial statements again, what we explained a little bit before. So the startup cost. I want to do this business, but I don't know where to start. So you need to start looking for competitions, look what they're doing, see how much they're charging, what's the margins the competitor are using to sell their products, is 30%, 40%, depending on the industry. Like in my case, every time I saw something on the shelf of any supermarket, and it was a competitor, I knew the supermarket charges or have about 35 to 40% margin on that, and the importer and distributor 30% margin on that. So I have to evaluate my purchase cost that matches the 40 and 30% margins to be able to compete with the brands or with the product. So it's going out. You need to look for stores similar to yours. Services, you can Google different services. You can make phone call. How much are you going to charge for this? Try to be a detective. You need to be a detective. That's not cheating. Is finding more information. You're learning about this process. You need to go out and see. You need transportation. Are you planning to buy your own car for delivery, etc.? Inventory, licenses, advertising and promotion. Right now, it's very important to have a good marketing plan. You don't have that, even though you have a great manufacturer, you have a great product and services, if your message doesn't go to the right people, you're not going to succeed on that as well. You need to have your team, legal, accounting, insurance, and licenses. Insurance broker, your banker, actually is missing here. You need a banker and an accountant and a lawyer. And working capital, of course. How you get working capital, we'll go in 1 minute. So very important for small business startups. Where to find money, Nestor? I have this great idea. I don't know where to go. Okay, let's have a seat and talk about your business plan. Show me your business plan. Well, I don't have it yet. Well, you need to start working on that. So the business plan is a tool that is going to provide very specific information for potential lenders and investors. That's no doubt about it. You go to the bank, the bank is going, the first thing they're going to ask you is, show me your business plan or show me your financial forecasting or reports. And you need to be able to provide that. You can obviously go around your family members and ask for funding, providing them some share of the business or not, depending, you can take your own savings or 401k, etc. You can go to investors. Most of the time, these angel investors or venture capital, they're going to ask for a portion of the business. It's up to you how much percentage of the business you're planning to share. And you can go to the bank or any financial institution to ask for a loan or line of credit. Just keep in mind sometimes when you start your business, unless you're doing something with technology or biotechnology or something with IT, you may need some R&D investors first to provide that kind of solution on those studies. But you're planning to do a retail or a small mom and pop place, start with your own money. You don't. It's very important when you start working towards funding. See if you can start with your own money. You don't need to start your own business. You don't need a lot of capital actually. Just plan to see. You need to calculate how much money you need to start, and based on that, work for 3 or 4 months somewhere else, save the money, and then you can invest that into your own business. You need to prove it that your business is going to be profitable before you go and ask for investors. I see people raise hands. Give me 1 second. I can go with Kumba. You can unmute and ask a question, please.
Yes. Good morning. Can you hear me?
Yes, perfect.
Yes, good morning. Thank you. So my business is an events management, wedding decoration, and planning business. It's really at its initial stage. But my question has to do with the investors you mentioned. You said you could actually reach out to investors to see how they could support the business. And in doing so, they may have to ask for a certain percentage. Now, for a business that is still in its embryonic stage, how much generally does one have to look into in having investors invest in the business? And if there's going to be some sort of percentage, give us an idea of the percentage that we could relatively be able to approve or agree that the investors take, taking also into account that this business is new from scratch. My second question is, you mentioned that when you're starting a business, at least you should have your own, some sort of money, money set aside to start. And then as things pick up, you know, other avenues would present themselves. So generally, how much do you think a new business could put aside to start?
All right.
I hope my two questions
Perfect.
are clear.
Kumba. And so how much percentage are you willing to share? That's the big question. And that belongs to your financial analysis here. And we're going to touch base on that later. And
okay,
you need to calculate, if you don't have any business and you don't have any sales, you need to do a forecast. And how I do a forecast? Forecasting is not like I'm going to guess about, I'm going to sell tomorrow 100 units and in 2 months, 300, 400. There is a market research, a sales projection technique that you need to do to be able to find out the market. Then you go to find data about the industry. Like how many players are selling what I'm selling in this state or in this country. And then based on the percentage of those players, you need to see if your business is going to belong to that percentage and calculate based on that percentage how much revenue you can generate. Don't feel afraid or scared, like because you're new, nobody's going to put money into your business. Actually, that's not true. When people say, Nestor, I have this great idea, I think it's going to be huge. I need capital because I need more money than I have in my own bank account. Okay, put a solid business plan, put your sales projections. You don't have any history, but you need to know about your market. And when the investor talks to you and they ask you a question about your business, your market, your industry, if you don't know well that, they are going to say, I'm not going to put a penny on your business because I don't know how you're going to handle this business. You don't know anything about your market, your industry, competitors. You need to be able to understand every single aspect of that. And how much you're willing to share, well, that's up to you. I wouldn't go with, at least you want to keep control of your business, right? 51%. But depending, if you need $10,000, it's not that much money for an investor. But if you need $300,000 for your business, then maybe you're willing to provide 10-50% share for an investor. And based on those projections, there is a formula about business valuation. How much is the value of your business as overall, and not necessarily with actual sales, but with projection as well, but related to the market research you need to do. So there is a formula to find out that suit number, but you need to have a lot of information in place before you apply the formula. So again, when you want investors into your business, into your company, you don't want to, you want to keep control of that, right? You don't want to lose control. If you lose control, then they can do whatever they want with the business. But again, we can follow up with a special formula or help you or guide you with more specific about how to calculate that specific portion of share that you want to give out to investors. I saw, Veronica, are you asking another question or that's from the hand before? Yes, no? All right, we'll just continue. Sales projection. So such projections are based on key assumptions about marketing. Number one is price, quantity, and timing, right? So you do your market research, you see that people are buying X amount of gloves in your area, and you're making projection based on that data. You can use projections based on units or dollar amounts. It's up to you. I will use both of them to help you with those projections. Sales projections are very important because when you forecast, it's the process to estimate future sales with the purpose or the goal to informing and make better decisions. Forecast is typically based on the combination of past sales data, industry benchmark, or economic trends. It's a method designed to help you better manage your workforce, cash flow, and any other resources that might affect your revenue and sales. If you don't have history or sales data history, you can use a benchmark, competitions, industry data to do healthy forecasting about your products and services. It's typically, I wouldn't say too hard to make projection because it is projections, right? But it's easier to establish businesses to create more accurate sales forecasts based on previous sales data. If you are new, you will have to rely on market research, competitive benchmark, and other forms of interest to establish a baseline for your sales numbers. Why is so important? Because with the forecast, you can see how much revenue you're going to generate. You can understand how much or how many units you need to sell to break even to start making profit for your business. So forecasting is the way for you to see upcoming financial future of your business. And it's not about guessing. Do not guess on this. You need to find some metrics that will help you to do this forecast for your product or services. Questions are going to involve in the whole forecasting environment is what do you hope to achieve in the next month, in a year, in 5 years, right? You have 0 sales and you want to open a retail space, how many units you're going to sell in the first month. Don't say $1,000, $3,000 or 3,000 units, sorry. Be realistic. This is forecasting. You need to be realistic and you need to go in accordance of the market, what your competition is doing, etc. How many customers do you hope to have next month or next year? You can do a forecasting about clients and customers. We were talking about the counseling services before. I'm planning to start with 1 a month, the first month with 1, then I will start with 2, the second month, then 3 or 5, so on in the following month. So the sales forecast is also your guide on how much you should be spending. Assuming you want to run a profitable business, you will use your sales forecast to guide you what you should be spending on marketing to get new customers, or you should be spending on operation and administration, depending. Your sales are not going up, you need to put more effort maybe on marketing strategies. If your sales are going up or your cost is going up, maybe you need to work on cost of goods sold, finding a better manufacturer or finding better, cheaper raw material, ingredients and products or services. So how much detail should go in the forecast? It will depend on the service and product, but when you're forecasting, the first thing you should know is to figure it out what you should create to forecast. So you have let me give you an example. You have a restaurant, you're opening a restaurant, and you want to do a forecast about your sales after the opening. I wouldn't suggest to go into each dish. Instead, try to work on the categories, breakfast, lunch, dinner, and drinks. Group them. It's going to be so much easier than just providing for forecasting every single dish. Obviously, as you open and start serving to people and getting clients and customers, you are going to see which items are selling the most, which dishes are not selling that well. Okay. Go next. We go to the financial statements here. Anybody has any question about forecasting? Or anybody actually have done any forecasting for their business or product before? Before we move to the financial statements.
Yes.
Yes.
This is Carlos. So I started my bookkeeping service last year. So it's been the end of 2020.
Mm-hmm.
And I just reached 1 year, and then I'm trying to grow. And one of the things I'm focusing right now on the helping my client keep track of the financial transactions. So by maintaining their books, so I can provide them balance sheet statement and profit and loss, mm-hmm. and trying to get them to a process where I can start also providing those forecast strategies so they can grow their business. So that is really my passion, to get to help my client to reach those type of CFO services as well. So, yeah.
Thank you so much for sharing. That's fantastic. Now, let me ask you something, that how complicated you find developing those reports based on your experience, so everybody can have a sense of idea, like what it looks like.
I'm sorry, what did you say? How complicated?
Complicated, or the time consuming to.
Yeah, it's a very time consuming, and what I find right now, most of my clients, the bigger issue is that they're commingling funds between their personal and then business. So you have to properly categorize every transaction, and basically training them to keep their personal and their business expenses separate. So that way make it easier to properly categorize those transactions. So that way it can fit properly, if it can fit on a proper report, either balance sheet or profit and loss. So it's very time consuming it can be very time consuming, but that's my passion. So that's what I like to do.
Fantastic. Thank you so much for sharing. And yes, Lincoln, I think, was a perfect example about that. In businesses, especially for the startups, they tend to mix personal and business expenses. Always, when you start a business, you have a personal two credit cards. Use one credit card only for the business until you set up your business bank account. Just use one credit card or bank for those specific transactions for your business. It is easier to manage. It's easier to disclose all the information when you do your financial reports. When you mix, I work with hundreds of childcare providers, and the majority are family home childcares. So they're operating in their homes, and some of them, they don't separate the family expenses with the business expenses. And at the end of the day, when they file their taxes, it gets challenging to put together those numbers. So it's time consuming, but you need to create a habit to do that. You every day, every week, sit down on your desk and start putting together all your receipts about businesses, or this was personal. Do record keeping all the time, but most importantly, always seek for a professional to help you with that. But you need to organize yourself before you send everything to an accountant. I have an accountant who always shares stories with me, and he said, Nestor, you know, I have two clients. One client makes $2 million in revenue. And these clients every year send me all the information to file their taxes. And he has everything organized, and I just spent about 2 to 3 hours to do those taxes, to file the taxes. So I will charge them $700 or $600, depending on how many hours. But I have this client who makes only $20,000 a year, and she brings a shoebox with all the receipts in it. Now, I need to spend hours and hours and hours to organize those receipts. So the funny thing is, like, I will end up charging her more than a client that is making $2 million. So again, you don't need to do your financial statements or your reports, but you need to be able to get organized and understand your numbers and understand your documents. So let's move with the financial statements, the three main ones. These financial statements are written records that convey the business activity and the financial performance of the company. These statements are often audited by government agencies depending on the circumstances, accountants, or different financing or investing purposes. So we have the balance sheet, the income statement, and cash flow. The income statement is a profit and loss statement. It provides a financial performance over a specific accounting period. So you need to have a period to calculate the income statement. And the balance sheet is like a snapshot of the company assets, liabilities, and owner's equity. So over a specific point in time. So my financial manager can come and say, Nestor, I need to create the balance sheet. I want the cutoff to be September 30th, 2021. So there is a specific date when you do this statement. Then you have the cash flow statement, which is the movement of money in and out of the company. Cash is very important. You need to be able to control your cash flow like the most important thing for your financial health. Cash is king. You don't have cash, then you are not going to be able to pay your liabilities, your bills, etc., and it's going to be complicated for your business to survive. So let's start with the income statement. With the income statement, we have net income, which equals total revenue plus gains minus total expenses plus losses. Right? And this is just an example of income statements, just for training purposes, obviously. So here we have under revenue, we have merchandise sale, and then we have revenue for training in case you provide different services for your business. So in sale, you make $38,000, right? And for training, you provided $3,700. Keep in mind that this is for a specific period of time. This is for Q3, July, September 2021. So this is a period, a time frame, from one day to another to get the income statement. Then for your expenses, you're going to have the cost of goods sold. The cost of goods sold is the cost of the merchandise you sold. Right? So you sold $38,700 in value, but the cost of the merchandise was $12,771. Then you have procurement costs, payroll, rents, interest paid, transportation, utilities. And for gains, he just, for example, I put, Nestor, I have an old computer or furniture in my office. I got a new one, but I sold the old ones for $1,400. So you record that as an income from gains, because you're not selling, your business is not selling furniture, it's selling other products and services. But you got money from selling the old furniture. In the same way, when you lose money, not because of the cost of goods sold, but because of other factors or external factors, like somebody sue you and you lost the lawsuit. So you need to pay $1,900 to this individual. So you record that as a loss expense. And the equation is revenue plus gains minus total expenses plus losses. You make profit of $10,104, your net income. Right? The net income is not that complicated. I found more complicated the balance sheets and cash flow statement, which tend to be more tedious than that. But this is just an example for you to see the picture of how you organize your revenue and expenses and gain and losses and calculate your net income. You can do this in Excel just to practice and get more acquainted with the whole process. Any questions here? All right.
And Nestor, I do have a question. When developing, your expenses and looking at your revenue, and in particular as it pertains to payroll and wages, would you mind sort of touching on, if you haven't already, on what percentage of what percentage of your overall income or expenses as to income should be on the line item? So how to budget, I guess, is what I'm really saying.
How to budget on payroll, you say? Sorry, could you repeat?
Yes, yeah. What percentage of your payroll or how much you should allocate for payroll and wages as compared to your overall expenses and revenue? This is the best way to ask.
So one of the things I would suggest first is to do a forecast on your income statement. We were talking about forecasting before when you do sales, right? So let's pretend I did the forecast. Let's pretend this business doesn't exist yet. So my forecast is going to be $38,000 for this quarter, quarter 3, July to September. And based on that, I need to check all the expenses that are going to incur for this period, including payroll. There is no a magic percentage on that, because what you need to know is if paying this amount is going to help you to achieve good profit. So maybe it's not about your wages or payroll, it's about your cost of goods sold or procurement costs, maybe transportation. So there is no an equation to tell it should be only 10%, 50% of your payroll. You know why? Because you can spend more on payroll, but this person, you got the best salesman in the world, and this person is going to make you $100,000 in sales. So everything will depend on the investment. Again, if you don't have yet the business as a startup, you can do this income statement based on the sales projections, because you already know how much you need to pay for rent. You need to calculate how much you're willing to pay to someone. I cannot afford to pay $8,000 having 2 employees because that's too much for me. So instead, I will hire maybe a full-time and another part-time to balance out my payroll wages. So I will keep your eyes should be located here on your net income. And obviously in other expenses that you can still change it or adjust it on that. But
that's a great response, because one thing that in my experience, for example, when you're applying for government grants or requests for proposals, sometimes they tell you what percentage you can allocate in that to your expenses over an overall operating budget. So I didn't know if that was, because in thinking of that, I'm like, well, it seems a bit intrusive on some cases, but on the other hand, is there a real formula to even really, you know, follow? Because it seems almost arbitrary.
I've seen that before, and it's when you do a proposal like that, and you know they're going to ask you what the percentage you are willing to invest, because the government wants to make sure you will hire people. They want to make sure the money they're putting down will be reflected on 2 or 3 people getting a job.
Right.
So when you do this, you need to see how much you're willing to pay or how much is needed to hire someone or a group of people. And based on this number, calculate the percentage based on the revenue you have or based on the income. But again, it's no, if they say how much are you willing to invest in percentage-wise, it could be 10%, 20%, 25%, but depending on the type of job or the level of professional you're looking for. One engineer may charge you more than someone who is,
Right.
Yeah. But again, you can do this, the forecasting for your net income, and just divide it. The payroll you're planning divided by the total revenue or the revenue net income to see what's the percentage you're willing to allocate. Because you don't want to lose money as well. You want to make sure you cover your expenses at the same time you're getting profit as well.
Sure. Thank you, Nestor.
My pleasure.
I have a shorter answer for this question.
Yes.
Whatever amount is of your expenses, the more net profit, the better. Anyway, it doesn't matter whether those expenses to the wage or payroll or anything else. The most important is the net profit.
Your bottom line is what you're looking for, right?
Percentage of net profit.
In some cases, I've seen that before with government grants, they require at least to have 20% to go to payroll. And
really? I see.
Yes, that happened. I've seen it. But when you do that, when you have that, you need to make sure that the payroll amount you have there is 20%. So you need to watch out your expenses. Maybe, I don't know, hire full-time, part-time someone, depending of the percentage you require. But it varies by state, by federal contract as well. So now, let me go to the next. All right, let's do something different. I'm going to put this link on the chat box, all right? And it's going to take you to a form on your computer or your cell phone. It's a computer and cell phone friendly app. And then you have 5 questions. Just click on those questions. Answer those questions, all right? And we are going to review them together, all right? It's going to take just a couple minutes, nothing complicated, but I want to see if you have any questions about income statements to move to the next one, and it will help me to understand if I'm missing something where I can improve the next conversation. Let me see. So I'm sending you now on the chat box the link. Please click on the link and answer those 5 questions about income statement. Give me some time to pour more water here. Not like a pass or fail, quiz or test, please. Just to have some fun in this training.
I can take it.
We have 3 responses so far. Thank you, Felipa. I got Amy fast. Let me see how many people we have. We have 10 participants. We have 8 people, okay. Okay, we'll provide 1 more minute. So Kumba, can you see my screen with the income statement scores? Just, I want to make sure I'm sharing the screen.
I'm just trying to.
All right. I see so far 6 responses. So let's take a look at it, right? Can you see the answers here on the different form? Just thumbs up.
An income doesn't form with another statement.
All right. So let's go over the results. Number 1 is that income statement is also known as a profit and loss statement. Within 6, that's right, excellent. An income statement does not contain information on which of the following: level of sales, gross profits, net profits, and cash flow. Yeah. So cash flow is the one it doesn't have, doesn't belong to income statements. The cash flow, remember the sales, level of sales, yes, how much sales you make. Gross profit, which is the revenue minus cost of goods sold. The net profit, which is the bottom line. And cash flow is a different statement. Cash flow is a complement for the balance sheets and the income statement as well. So the income statement shows the financial performance of the business on a given date or period of time. Perfect. When creating an income statement, the interest on a loan is an expense, revenue, or neither is an expense. Okay, you get a loan, right? The loan is cash in, right? It's cash in. But the interest you need to pay every month is cash out. So it becomes an expense. And net profit equals, this was the formula, gross profits minus expenses. Gross profit is revenue minus cost of goods sold, right? So if I sold a product for $10 and my cost of goods sold is $4, so my gross margin or my gross profit is 6 per unit, all right? Excellent, thank you so much. Let's talk about the balance sheet here.
I'm sorry to interrupt, Nestor. Ladies and gent, would you mind pressing mute on your microphone while Nestor is presenting out of respect, especially because we want to go back and listen to the presentation for reference? Thank you.
Thank you, Stephen. So now let's talk about balance sheet. So what is a balance sheet? Very important formula, very important statement to see how much how many your assets and your liabilities and how much owner's equity you're generating, your business generating. Remember, the balance sheet is not for a period, it's a specific time period. So the balance sheet provides an overview of the company assets, okay, assets, liabilities, and stockholder or shareholders, owner's equity as a snapshot in time. The balance sheet total will be calculated already, but we're going to see on the graph how we're going to have an example of how you can create a balance sheet or understand to read a balance sheet. So number one, you need to be able to locate total assets on the balance sheet for a period, then total liabilities, which should be separated listed on the balance sheet. It might not include contingent liabilities. Then you have the stockholders' equity in the balance sheet, which is the last part of the statement. So based on this information here, for current assets, I have cash, marketable securities. We're talking about bonds, stocks, account receivables, pending invoices from clients, inventory, prepaid expenses. And current assets is those assets that you can convert into cash, into liquidity within the year and 2 years, all right? Anything that you can grab from your business and say, I want to sell this within a year and 2 years and make liquidity for your business. Long-term assets is something that you can cash within 3 and 5 years or longer. We're talking about building, we're talking about long-term investments, securities, you have for 10 years, etc. So here in this example, you're going to see cash, marketable securities, account receivables, inventory, prepaid expenses. So total current assets is going to be $30,000. And for long-term assets, it's going to be $17,000. So to get all this information for the income, for the balance sheet, it's quite tedious for your financial advisor because you need to get all this data and information, to gather this data and information to properly allocate to these categories for the balance sheet. Then we go to the next section, what is liabilities. We're talking about current liabilities, accounts payable, short-term loans, income tax payables, accrued salaries and wages, and in revenue, current portion of long-term debt. Again, liabilities is something that you can pay within a year or 2 years. Long-term liabilities is something that you have more than 2 or 3 years. And then at the end, you have the shareholders' equity, or stockholders' equity, or owner's equity, which is the owner's investments, return, earnings, and others. Right. So the formula is assets minus liability equals shareholders' equity. Or in some cases, is assets equals liabilities plus shareholders' equity. Either way is fine. You want to make sure to compare that your assets will cover your liabilities and shareholders' equity. Does anybody have any questions about the balance sheet?
So I have a question. I'm sorry. Go ahead. I'll wait.
No, I said no. Sorry.
Oh, okay. Go, Stephen.
So I have 2 questions, and I'm kind of unrelated. But the first question is in reference to liquidity. Most of these business owners on this track are new to business, and liquidity and building or lack thereof is a huge issue. And everyone knows the challenges with entrepreneurs and low cost liquidity or capital. Do you recommend that in order to start building business, not only credit, but also in liquidity for business owners to take out a business loan from a bank? or, in order to start building that capital and get some working expense money? That's the first question.
It depends how much money you will need for funding your business, your startup. Again, if you're looking for $3,000, $5,000 to start your business, probably you can do savings, find your own money or family members. It's easier. You don't get stressed out to paying back an interest for that small amount of money. And to be honest, when the capital is not huge or you don't need a lot of capital, it's better to try instead of getting a commitment with a bank, because even the bank for $10,000, you have to put your mortgage, your house, or any big asset you have.
Right, a personal guarantee.
As a collateral, yes. And for that amount of money, probably you don't. It's quite risky. What happens if your business doesn't work, or any disaster happens, COVID, 2 years ago. So depending on the amount and on the risk, that's why having these financial statements and documents will help you to understand, like, is your business on risk? Do you need a lot of capital, or you don't need a lot of capital and you need to start just selling? It's very common. People say, like, my business needs $10,000, I need to go to the bank right away. Well, first of all, do the due diligence and see if you really need amounts of money to open your business. Many successful entrepreneurs, they start on the garage. You need to create the first sales to see if your business is doable. You want to offer consulting services. Find a client first. Test the water. If it doesn't work for a few months, then you can think, like, yeah, this is nothing that I don't think is going to be doable to continue doing this. Or maybe I need to rethink the way I'm doing the business or the strategies I'm implementing for my business. Does that answer your questions?
No, yes, absolutely. I think that's a great response to that. The second one is in reference to structuring of your corporation in general. Once a legal advisor of mine advised me when it came to your shareholders and designing or recruiting folks for your board of directors. They recommended that you have an advisory board and maintain the actual physical shareholders with yourself and, close family members or someone you really trust, because when you start giving up equity that way, it can be really hard to get it back. And I just wanted to get your feedback on that as well, because a lot of these people might be in the same position.
All right. We have legal structure like sole proprietorship one. You are individual, you're running your business, you're liable for any issues with the business. Then you have the limited liability company, which is a hybrid between a sole proprietorship and a corporations. You're protected, you're not liable, you're protecting your personal assets from the business side.
Right.
Just to give you an example, I have a coffee shop, and a small coffee shop, and the floor is wet. A client walks in, slipped, and breaks his elbow or arm. And this client sues me, and I lost. I need to pay $10,000 to him. So if I'm a sole proprietor and I don't have $10,000, they will go towards my personal assets as well, the business and my personal assets. If I'm a limited liability company, they will go against my business assets, not to my personal assets. So I'm protected. My business, I'm protected as an individual. Corporations, you have S corporations, you have a C corporations. S corporation, you have stakeholders, shareholders, potential investors, and you're planning to create a board of directors in your business. And the C corporation is mostly you're planning to go public. You're going to sell shares later on to raise more capital for the business. So which one is better? Which depends on how much ownership you're planning to give. Again, and this is very important. I can see this a lot with engineers, scientists. They have a great idea, but they don't know how to operate or how to run a business. They're geniuses. They invent stuff all the time, but they don't know how to market this product or manage a business. So they might be willing to give out more ownership because they will be on they're not running or operating the business. But you're going to be involved in the business, you're going to keep control of the business. You don't want to provide too much ownership so you can create S corporations when you're keeping them, you are holding the greatest ownership, or you keep control of that. And you C corporation, you plan to, you have an invention, and then in 3 years you're gonna go public, or you want to raise more money, and you can sell shares for the S corporation. But again, it will depend on the type of services and the product you want to provide and how much control do you want. Maybe you don't want to manage the business. You have the idea, you have the patent of a service or a product, and you just want somebody else to do it. Or you want to keep a good a share percentage of that business. It will depend, Stevens. It's no, I wish there is a magic ball that will tell me like, this is the ownership you need to do. Now, let me tell you something. If you start something from the bottom, from scratch, you need to stay in control. Try it, prove it, fix it, continue with that. Investors, again, they want to see how well you're managing or you're running the business. And if my expertise is marketing, I want to have an investor whose expertise may be sales or operations or manufacturing. So you don't want to, you want to make sure you want to delegate or find someone who is more skilled in something that you're not. That's the best partnership you can start looking for. If I'm not good in sales, but I don't know anything about finance and accounting, I want to find a partner or an investor who knows how to run these financial reports and who understands more about accounting and finance in general.
No, that's a great response. And thank you for that, Nestor, indulging me. Thank you.
My pleasure, Steven. So anybody else have a question? This is a lot of information, guys. This is not like 2 hours you're going to get, oh, I'm going to be able to do my balance sheet statement tomorrow. It will take time. It's a process, but most important is educate yourself, try to understand each concept, each category, practice. This is the best way to get it and to see it. All right, so we'll do another quiz, very quick. We're going to provide a couple of minutes for this. And I'm going to put this in the chat again. And this is about the balance sheet. Okay, I'll give you 2 minutes. And please don't worry about right or wrongs. Try your best. This is, as you go, you're going to learn more and more and going to get more comfortable with the whole process.
This is my weakest part, but that's why I always have an accountant and CPA. I got a 40% candidly, so I had some work, Nestor, work.
You know what, we're going to go over the answer. Is the balance sheet is one of the trickiest statements. Well, cash flow gets a little tricky too, but it's challenging though. That's it's like, no, let's leave this to the professionals. All right, one more minute, and then if you haven't completed, it's okay. We can go over together with the answers. Next time I will try to do something with Bitcoins here. So you get right answer, you get a coin to your wallet. All right, so we have 3 responses so far. So let's do it together. You're still working on that. So the number 1, which of these does a balance sheet show? 1 quarter, 1 year, 1 tax year, 1 moment in time. I want to see my balance sheet to date, 2/11/2022. 1 moment in time. The difference with the income statement, the income statement reviews in periods. So you go from Q3, September 1st to November or December 31st. The balance sheet goes to 1 time in a specific. Number 2, intangible assets usually are reported in the balance sheet as accruing assets. Intangible assets are long-term assets. Current assets is capital cash, something that you can convert into money, into cash within a year or 2 years. Long-term assets generally include inventory held for sale. Inventory is current assets. Prepaid rent, you're prepaying, it's current. Account receivables, it's not. And land held for a possible future purchase, that's the correct. Which of the following is not a current liability accounts? Liability account, accrued payroll, dividends payable, and prepaid rents is the correct answer. It's not a current liability. Accrue is a current liability. Dividends payable is a current liability. Subscription collected is a current liability. The formula of the balance sheet is, I tricked them a lot here before. I put twice, actually 2 options were the second and the last ones. Assets equal liability minus stakeholders, and I'm sorry, liabilities plus shareholders equity, and assets minus liability while shareholder. So thank you so much. And let's go back to the last part of the workshop. We do cash flow statements. Cash flow is all the cash money in and out of the business. Is the movement of money in and out. You need cash, no credit, you need cash to be able to pay your liabilities, your payroll, your monthly expenses and everything. So you need to keep an eye of your cash flow every week, every month. If your cash flow is negative, you won't be able to pay off salaries for the week or for the specific month. You're not going to be able to pay utilities. You need cash all the time, positive cash flow in your business every single day, every single week, every single month. It's very important to keep that in mind. As similar to the balance sheet, cash flow is a way to see operations, stakeholder, your purchase stocks, everything gets together into the management about what is coming into your business and what is going out for that business. So you have 3 categories for components of the cash flow statements. The first one is going to be operating activities. And on the operating activities, we have depreciations, accounts receivables, accounts payables, taxes payables, inventory. About all related to your operations. Then we have investing activities. You purchase equipment, you're investing on this equipment and different technology for your business in the long runs. And the last one is going to be financing activities, notes payable, shares, stocks, futures, depending on what kind of financing activities your business doing. Again, very complex to complete a cash flow statements. You need a professional to do that. I found myself easier to do an income, to create an income statement, and the other statements leave it to someone who had the expertise. Another important point into the financial strategy, financial planning, is the break-even analysis. So break-even is pretty much telling you how many units you need to sell to be able to make money. To be able to make money, you need to cover your cost, expenses, to pass that specific point. So here in accounting, the break-even unit is calculated by dividing the fixed cost of production by the price per unit, the variable cost of production. So this is a general formula. Break-even is fixed cost divided by gross margin, gross profit margin. The gross profit margin is calculated as the net income minus cost of goods sold, all right? Remember the income statement I showed you before? It gets a little technical here, but don't worry, you have this presentation and you can go back and make your own example to see if how you calculate your net income and gross profit margin. So the net income minus cost of goods sold. So net income, cost of goods sold, right? Revenue and expenses divided by that net income. So that is going to provide a percentage for the gross profit margin. So once you have the gross profit margin, is when you use the fixed cost. And the fixed cost is going to be here in all your expenses, but not cost of goods sold. Why cost of goods sold is not fixed cost? Because the cost of goods sold will change or varies based on the number of units you sold. So it becomes a variable cost. The fixed cost is that kind of cost that you're going to pay regardless of how many units you sell. You can sell 50,000, 60,000, but you still pay $6,500 for procurement costs, $7,500 for payroll, $3,600 for rent. This is not going to change. Only this change based on the sales volume. So that's why I put variable and fixed costs. And then you get your break even. So when I do this formula and I get $28,000 for 110.45, what this number means? When you see here, $38,700 is what I sold, all right? And I made $6,894 in profit. So I'm making profit selling this amount. But if I'm going to be a startup and I wanna know how much money I need to make or I need to sell, how many products I need to sell to be able to get profit, you need to do this equation. So if I sell $28,410 here, my net profit will be zero. So my break-even point is $28,410 in revenue. Once I do $28,500 here, I'm going to start making $1, $2, $3 profits. So this is the point in time when you're not even getting profit or losing money. You get zero in the net income. So why is important this? Because it will tell me that I need to be able to sell, my revenue needs to be greater than $28,410 to make profit. If I do less than this amount, I'm going to be in loss. Let me see the chat. All right. I do have, let me see. Let's do this together. Actually, let me, oh, sorry. Let's do this one more. This is about cash flow and break-even point. Please, I give you 1 minute for this one. Don't feel overwhelmed if you don't get it. That's okay. Especially for gets a little more complicated with terminology and calculation for these ones. All right, 1 more minute.
I did better, Professor.
You got it started. Your cash flow is going up then.
Right.
Okay. You can see the screen here. Let's do it together. Let's review it. So what is the definition of cash flow? We have profit coming in and out over a period of time, money coming in and out, the money left over at the end of the period, or money coming in and out for a period of time. Last one is correct. It was very confusing, the second one though. So I will take that as a correct as well, because it wasn't specific for a period of time, but it's money coming in and out, all right? So if you reply the second one, good too. Number 2, which of the following is a cash inflow? Cash in, interest from money in the bank, dividend payable, wages, equipment on lease. The answer is interest from money in the bank. Your money is sitting in the bank and is making interest, it's cash into your business. Dividend payments is out. You gotta pay dividends to the shareholders. Wages, employees, is money out. Equipment on lease, you're paying out, cash out. Which of the following is a cash outflow? Interest earned on cash, venture capital, interest on loans, or retained profits? So outflow is interest on loan. You're paying interest on that loan. Retained profit is just keeping profit in. If you decide to pay dividends, you will have a dividend for the shareholders, and that will be cash out. But in this case, it's retained, so you're not providing the dividends, just keeping the profit into the organization. What is the correct definition for the break-even point? Total at which the sales revenue equal fixed cost, and the difference between selling price and total variable cost, total sales needed to amounts for the business, and the revenue gain for selling the output made. The right question is the green one, total sales needed to amount cost of the business. Definition, actually, I should change it, but the breaking point is where you're not making profit and you're not losing money. It is zero, it's break even. I will change it out for the next time. What is the business doing at break even point? That's the answer, making neither a profit nor a loss. Oh yes, you got it. Excellent. Excellent.
Sorry.
Yes.
For question 1, you said if you respond number 2 is okay, right?
Yeah, because it's almost the same, just over time. Yeah. Remember, cash flow is similar to income statement. You have a period of time.
I just saw the first. Yeah.
And that's why I'm giving.
I thought Nestor was going for an official academic definition versus a colloquial definition.
My definition will be the second one, but then I think.
Thank you. That means I got everything there. Thank you.
Again, don't feel pressure. This is not a test. It doesn't go into your reports for this course or anything like that. This is just for fun.
For me, I'm a bookkeeper. That's really, I gotta show that I get this.
We'll stay here in the group. Don't worry.
That wasn't fun, Nestor. That was stressful. You know, that was a little stress there, okay? You said fun. I don't know what your definition of fun is.
Like. That's part of the experience of working with numbers and financial reports and statements.
Love all of these ambitious entrepreneurs who are so competitive that even when you say it's fun, it's still like, I have to win. I love it.
Just kidding, okay? Just kidding, all right?
That's the spirit. Next time I will talk to Marta and see if we can do something similar. But now I get a little bit about what you're looking for in your competition spirit. It's awesome. I love it. Key takeaways, we're running out of time, almost a couple more minutes. But again, a financial plan is the most important thing a small business needs. It's a roadmap. You need to have a financial plan. Otherwise, you won't be able to go anywhere. You work on your startup costs, budgeting, forecasting. Even though you have no sales history, even though you never sold anything for your business, you can still work on your costs, on your budget, and your forecast. The income statement provides valuable understanding of the company's operation and management. Your net income is low, you need to check your expenses. And someone, I forgot who, I think was Nico who said, or somebody mentioned it, that less expenses, more income. The balance sheet provides a snapshot of the company finances at a given point in time. Very important to have the analyst to see if you have your assets are equal to liability minus owner's equity. You heard this before here in America. Organization, big corporation looking to please shareholders. They want to make sure the shareholders are happy with the numbers. Cash flow is a movement of money in and out of the company. And the break-even point is important for you to know also because you will see or you will understand or will you find how much money you need to generate to make $1 in revenue, in profit, all right? So you're looking for your profit. If your business is not making profit, you need to rethink and reevaluate your finances for your business in general. Any last questions from the group for today?
I have a question regarding Maryland Business Owner Center. Do they provide the service like calculation of break-even point or any other financial consultations for specific businesses?
We will provide some guidance on that. We don't do the reports or the documents for you. We will explain to you how to, based on the information you can provide to us, how to allocate the categories to your cash flow, balance sheets, but you still need to find a financial advisor or your accountant, CPA, to do those reports in statements for you.
Mm-hmm. Yes, we don't need statement and reports just to understand how to yes, just to understand how to calculate. And how can I do it? I can just visit your website, or how can I sign up for this consultation?
I'm sure Stephen already sent it to you, this presentation. If not, we can do it later. But at the end of the presentation, you're going to see Marta Jimenez and my name's
okay, I see, yeah.
And phone number.
Mm-hmm.
You can always contact us and we will schedule a consultations, a one-on-one session, and we start from them.
Great, thank you.
Very welcome. Any other questions?
Nestor, not next week, but week after, we have our work group where we come together and it's an opportunity to collaborate and ask any questions. Last time we did something related to the first presentation on writing a business plan by tweaking the mission statements. For this one, and you don't have to have an answer now, perhaps you can think of an assignment or something we can work on in our facilitated work group that will kind of bring home the points in your presentation today.
I can do that. When do you say it's going to be?
It is, let's see, it is on the 25th of February.
Okay. I will come out with some assignments based on what we covered today. Nothing too challenging for the balance sheet or the cash flow, but activities that will help you to reinforce the concepts. And I'll be happy to do that. Yeah.
Thank you, Nestor. That's so appreciative. Thank you so much.
Absolutely. We can discuss after these maybe tomorrow. Oh no, sorry, tomorrow, but next week on that details.
Yes, that would be great. Thank you. All right, thank you, Nestor.
My pleasure, Stephen. Any other question? Well, if we don't have more questions, first of all, I would like to thank you so much for everyone here. I have a good time. I know this workshop is heavy or gets to be heavy because of the content, naturally the content of the workshop, but it's going to be very important and it's a complement of what Marta explained to you with business plans and later what we'll do with the marketing. Well, thank you so much, Stephen, for having us today. Thank you everyone here for your time and dedication and being so competitive. I'm going to make something different next time. Yeah, you're going to have more fun for sure.
Really
a pleasure enjoying the nice weekends, the nice weather. It's very weird, but it's nice. So have a wonderful, wonderful weekend and see you soon.
See you soon. Bye,
you so
everyone.
much. See you.
Have a great weekend, everyone. I'll be in touch with
Yeah,
the slides
okay. Wonderful
and
weekend.
also the recording of this presentation, which I'll stop right now.